Welcome to Wealth Beyond the White Coat, a show where we dive deep into the world of financial freedom for dentists and medical professionals. I'm your host, Darren Flesher, a dentist with a passion for uncovering the strategies that lead to a prosperous life beyond the office. Every episode will explore the avenues of alternative investing, tax mitigation, and secrets to build wealth that the textbooks don't teach you. Whether you're looking to enhance your financial literacy, discover new investment opportunities, or simply find a better way to manage your money, this is the place where your financial health is the core of our conversations. Welcome to Wealth Beyond the White Coat, where your journey to financial clarity and freedom begins. Okay, welcome back to Wealth Beyond the White Coat. In this second part of our interview with Jim Woltmann, we go deeper into how his investment strategies have evolved since joining Legacy Point. And he also shares some of his experiences with different investment classes and how they've provided him with more freedom and flexibility in his dental practice. So let's jump back into the conversation with Jim Woltmann. You mentioned some buddies that kind of held back and didn't really jump in here. For you personally, were there any kind of misconceptions around alternative investing and that you've discovered to be different once you got involved here? Like anything changed for you as far as what you thought you knew?
With anything, there's always an inherent risk, right? Some things may not work out.
I can buy Apple stock today. That's still risky.
Yeah, 100%. And originally, when I first jumped in, it was a smaller deal, and this one is a no-brainer. It's just an easy thing. It's not too sexy, but you're going to get your return. You're going to get your money in 14 months. And then as you start to see things come to fruition and you start to see that the investments they just make sense for who I was and where I was. I'm 50 years of age now. My kids are all, my youngest is coming out of college. My expenses are starting to drop a bit, and I've got a lot more capital that's available to deploy. Maybe others, they're in different stages of their career and their practice and what have you than I am. I would do it all over again. And I continue. My biggest challenge now is to control my urge to do a hell of a lot more than I should and be reckless with it, because just seeing the returns I'm getting, it's a little bit shocking in a way, to the point where my accountant's, "Hey, Jimmy, just pump the brakes here," because he started seeing massive amounts of money sliding out of my accounts. He's like, "You sure these guys are legit?" He goes, "You saw the Madoff movie and you saw what Bernie was doing to people. They could be."
Two words: due diligence.
Exactly.
What's interesting, you talk about the illiquidity is an issue, and your point is valid. However, a counterpoint would be if you are managing your stock portfolio like a disciplined investor, it should be treated with the same illiquidity. Unfortunately, we are emotional creatures, and human beings are bad investors for the most part. So we never actually keep our money where we're allegedly investing it. So the difference is, while you can click on the mouse and press sell on your stock portfolio, you can't do that in this. So there is a forced discipline required, but the illiquidity premium, there's what we call an illiquidity premium, meaning because it's illiquid, you will get a higher rate of return than you would in a liquid market, typically speaking. Jimmy, here's the thing, who do you think is a good candidate to be a part of this group? Because it's not for everybody. It's not for everybody.
Yeah.
Who is a good candidate to be a part of this group? Who should consider being a part of this group?
Yeah, I think that I was toying with buying some real estate and getting into like rental properties locally by my area and coming out of what I know a lot about. And I think that you hear of people investing in car washes, delis, and doing things out of their lane. I think when you get to a point where you start to have some cash reserves and you just don't know how to deploy it or how to get a good return on your money, I think that's when you're getting to a point where this is probably something great to consider. If you're doing the other things and you've got your other buckets filled, you've
You're
done
growing your business, because I would argue typically investing in your business is one of the highest rates you'll ever get.
Exactly. Yeah, my practice now, I'm hitting a ceiling, and I'm at 50 years of age. I'm not looking to blow this thing open and try and go crazy on it, because I'm really happy with the returns I'm getting out of it. But I agree, you got to invest in your practice first. These younger docs are coming out with some really high student loan debt. At an age, you're going to get over that, and that's what's typically what happens. I think if I was 40, I would have jumped in on this at 40. I didn't know you guys or know of it. It was even available at that time. So now, looking back on it at 50, I still got a good runway ahead of me to try and capitalize on all of this to get me to where I need to be, so that you could be financially free and just start to pivot out of what I've been doing for a profession. So my buddies who didn't jump I think that their biggest reluctance, I think most people, it's just trust. I think trust is first and foremost.
That's legitimate.
And I think that, and I've always been the ones with my buddies that I've always gone first with everything from having kids to buying a practice. I just had a grandchild at 50. So I don't know. And I think a lot of that is just your issues, demeanor, and how you approach life. So
We talked a little bit before we hit record here about just obviously a lot of what we do here is trying to, you could do with an investing perspective, but part of what Legacy Point is more about your finances as a whole and about managing legacy and planning for the future and all that. We talked a little bit about the resources online and how while they're still building in volume, the quality and the level of detail through which you'd have to work to get there to complete it all there's a lot. Talk a little bit about as far as some of the exercises or resources in addition to the investing stuff that we've talked about. What have you tackled, or what do you still have on your to-do list as far as estate planning or emergency stuff, or whatever you've got still left to do on your to-do list? Hey, I just want to interrupt real quick and say thanks for listening to the podcast. If you didn't know, we have an associated Facebook group also called Wealth Beyond the White Coat. Over there, you can ask your questions, get feedback from group members, and have a close community of medical professionals who are likely interested in the same things as you. Whether it's alternative investing, tax mitigation, ways to keep more of your money, or even protect your assets, we're going to discuss those things in the group. Additionally, we have a private investors club called Legacy Point. As a member, you'll get exclusive discounts to preferred vendors, and you'll get access to private investments that you'll find nowhere else. Whether it's hotels, apartments, oil and gas, equipment rental, you name it, we'll be discussing those details and offering those investments to members only inside Legacy Point Group. If you want to learn more about that, please contact me or simply email info, I-N-F-O, at legacypointgroup.com or go to the website legacypointgroup.com. And Wealth Beyond the White Coat podcast listeners get an exclusive discount if you use the code WealthBeyond. That's all caps, all together, WealthBeyond at checkout. I'd love to have you in the group, and I'd love to see you making more passive income as you move towards financial freedom, whether it's freedom to retire early, spend more time with your family, go on more vacations, or just do more of what you love while you're in the operatory. I'd love to see you doing that as part of Legacy Point. So here's to improving your financial health.
yeah, I'm still working through this family emergency workbook, which it's pretty extensive, believe it or not, if you really start to dig into it. I've met with my attorneys as far as as far as where my assets are going to go upon my demise and what have you. But I was talking with you earlier, is there's so many documents and so many things that I never even gave any thought to until they were presented in this group. And a lot of times people don't act on half of this stuff. It's every management company you're with or every consulting company you're with, you tend to only use about 10 to 20% of what's available to you. I think if you're somebody that really pushes the needle and goes full in, there's a ton of value in just a lot of the materials that you have on your site that's available. And I've only touched the surface. I'm probably only 20 or 30% through it all.
Jim, were you in the meeting that we had in St. Louis?
No, I wasn't there.
Okay, so what's interesting about the meeting is we were having some conversations because I have a background in the traditional financial services, stocks, bonds, insurance, all that stuff. So I know how that world works. I know exactly how it goes. And it was funny. We were there to talk about alternative investments. Somehow life insurance came up and we had an extensive conversation on what is an appropriate amount of life insurance and what type of insurance makes sense and who you should be insuring. And there's 10 guys there and they were all like blown away. Like they had never heard that. And Matt and I were like dumbfounded how this was the most valuable conversation. We were like, for 3 days, we couldn't believe it because everyone came up to us and talked to us about it. And we're like, really? This was the most valuable thing you found? And so and then one guy says to me, who a lot of people would probably know if we said his name here, he was like, can I never talk to a traditional financial person and just deal with you from now on? I'm like, I'm not in the insurance or stock market business, but you can call me. I'll answer any question you have. He's okay. I'm doing that. I'm like, that's fine. But if you have to buy insurance, I'm not your guy. And they're like, no, hey, that's fine. No, I'm only dealing with you. I'm like, okay, whatever you want, man. But it's really fascinating. So the alternative investments are sexy, but there's a lot of other things under the hood where you're going to get truly unbiased perspectives because we're not in that business.
Yeah. Yeah. I've always, as far as insurance and things like that, I was never a whole life type guy and buy into these boutique type plans where the brokers are making tons of money off you. I just pretty much I've just laddered term policies, and at some point I'm sure I'm not going to need them anymore, right? And they'll just expire, and that's it, because my assets are outweighing what my liabilities are going to be. It's pretty relatively soon.
What's interesting, if you're in the insurance industry, you would say self-insurance, what you're talking about, just means no insurance. And obviously they're coming from an angle, a biased angle, which is fine. It's the business they're in. But the reality is, how many kids do you have, Jimmy?
I got three.
3 kids. Let's suppose that you're worth $50 million. And by the way, I don't know what you're worth today, but at 50 years old, your life expectancy is at least in the 80s. And I don't care if you're worth $5 million today. There's a very real possibility in 30 years you could be worth 50 million bucks just based on some of the things you're doing. Quick sidebar fact, like 95% of Warren Buffett's wealth came after age 65, which is the power of compounding. So, but if you have $50 million split 3 ways and you do proper estate planning, you don't necessarily need life insurance. You may want life insurance. That's a different conversation. That you may not necessarily need it.
Yeah, these are just the things we're never exposed to. We all go to college, we go to dental school, we come out and we've got just enough to get ourselves into trouble. And that's just the way it is. And we never have any knowledge or courses on how to run a business or run a practice. And it's just baptism by fire. And this whole spectrum, which you guys have exposed us to, is just a whole other thing. It's just the same thing, stuff we're just not aware of. And you got to hope that you have smart people around you.
Hey, I just wanted to interrupt the show real quick and tell you about an exclusive member discount for Legacy Point Group members. The company is called Gelt, and they're both tax planning and tax preparation. We connected because their CEO actually comes from a family of physicians, and he understands the financial complexities that healthcare professionals face these days. Legacy Point is honored to partner with Gelt because it's our shared mission to empower successful professionals with optimal tax and financial outcomes. For your 20% discount off financial planning and tax preparation and priority access with their onboarding, become a member over at legacypointgroup.com.
The challenge is with, and Darren and I have talked about this at length, with physicians and dentists, because you guys go to school for so long, there is this unconscious, dare I say, hubris that some people get, and they think they know everything about everything because they went to school for 10 or 12 years. The reality is a lot about one thing. If you're an orthopedic guy, it's orthopedics. If you're a dermatologist, it's skin. If you're a dentist, it's dental. Now, you guys have both told me, or people in your shoes have said, a new dental grad doesn't know jack. But it is interesting because the average person goes to school for 4 years. So you think if you've gone to school for 8 to 10 years, you're smarter than everyone. You might be, but you're likely not. And especially in an area that's not your lane, so you will, your lane, if you will. And Darren and I know numerous people who had that attitude and unfortunately got caught in some pickles because of it. And they had to eat a big piece of humble pie.
You talked a little bit ago, Jim, about how your mindset or your outlook towards your practice has changed in potentially a positive way. Like you thought you were sprinting to the finish, thinking I've just got to amass this capital. Has anything changed with like your kind of your personal life as far as your approach to what you feel like you have to do there? Has it freed you up to do anything differently there? Have you been able to pursue personal development stuff or anything that you just had put on the back burner that you feel like now you've got the opportunity to see that thing through?
Yeah, it definitely freed me up as far as my work-life balance, for sure. The one thing that's fleeting here is time, and you got to take advantage of it while you have your health and you've got your well-being. I vacation quite a bit now. I try and get away at least once a month somewhere. I try and do 4 great trips a year. I practice Tuesday, Wednesday, Thursday, so 3 days a week. And my goal is by next year to get down to 2 days a week. And I think it's just because my whole mindset changed, and that I always felt I had to produce, and the dentistry was my number one thing. And now I got another engine running. I always had all my other investments, but they were never all that exciting. But I think with this, over the next 10 years, I can really amass a good amount of additional wealth in other avenues that are going to really afford me the ability to even do even more.
Yeah, I talked about this a while back in a different forum, but we talked about compounding and the power of compounding. And I think it applies in the reverse here. Ross said, if you take $1 back from the IRS and then go put it to work for you, if you do that over, like you said, 10 years, the ability to compound that investment and keep pulling money back, but also keep putting it back to work for you, I think you'll be pleasantly surprised at how quickly that compounding snowballs for you and puts you where you want to be much sooner than you ever thought possible. I think you'll be really impressed.
Yeah. I saw my tax bill because I'm paying my tax. I have my returns are due in 4 weeks. I file on an extension, and it's really any dollar I could save from the government that's my number one priority, because I want to pay whatever I have to pay legally, but then I want to be able to just pay the least amount possible. I think, like you said, that's a major amount of money. It's extraordinary.
At least the government spends the money efficiently and effectively, Jim.
Yeah.
I mean, I think everyone would agree with that, regardless of what political flavor they are. I think everyone would agree that the government's very efficient. So,
You got any more questions, Ross? Anything you want to run by Jim?
I could talk forever, Darren. So you're opening a can of worms there. No, I just think obviously Jim speaks of his experience. He's had a good experience. I think it's worth, if this is intriguing to somebody, I think it's worth a conversation. It's absolutely not for everybody, and that's completely fine. But if you own a practice and you're successful financially, there are tools that can help you from a financial perspective. Now, you may not be open to them, and that's completely fine. You may be all set with your existing advisor, and that's perfectly fine. We are not in the business of taking people away from advisors. We are not. If you join this group, we are not trying to step on anybody's toes, and we're never going to tell you to leave somebody. But we're happy to have conversations with your CPA and help you out in any way we can.
Jim, is there any advice you'd want to give to somebody who is considering doing something like this? Financial freedom is about making the right moves at the right time. As practice owners, we often reach a point where growth stalls. Instead of maintaining at that plateau, consider cashing in now, putting that money to work for you, letting it double, triple, or even more over the course of your career, and then go pursue more of what you love to do. This is exactly what I did with my friend JW, a dental practice broker who found the perfect partner for my practice, maximized its value, and optimized the deal terms. He offers a free valuation for those considering a sale. If you want an introduction and the same red carpet treatment shown to me by my friend JW, email me at darren@legacypointgroup.com. That's DEREN @legacypointgroup.com. And I'll be happy to connect you with JW to start your journey to financial independence.
I would just be true to yourself and really just explore it. And if it's right for you, great. If it's not, then just keep on doing what you're doing. There's no right or wrong here. It's just got to feel well for you, and it's got to be the right time for you. But I'm appreciative of you guys. You guys have really opened up my eyes to whatever is this whole new level of possibilities, and I'm grateful for that.
All right, perfect. I think that's a good place to end on here. I appreciate your time today and being willing to share your experience. I know it's been a couple years now of being involved with Legacy Point and Ross and Matt and the differing opportunities from what you'd been doing before. And I appreciate you being willing to come on and tell your story. So thanks again.
That's my pleasure. All right, fellas. Thank you so much.
All right. I hope you enjoyed that as much as I did. Throughout this 2-part series, we had Jim Woltmann on, and he shared his transformative journey with Legacy Point, detailing how alternative investments have provided significant returns and tax benefits. From changing his mindset about his dental practice to achieving a better work-life balance, his experience highlights the potential of diversifying your portfolio. His story underscores the importance of due diligence, trust, and strategic planning in achieving financial freedom. Thanks for joining us on this insightful journey to wealth beyond the white coat. Thanks for listening in to Wealth Beyond the White Coat. Your time and attention mean a lot to us. If you found value in today's episode, please consider leaving us a review on your favorite podcast platform and share it with your colleagues and friends. Your feedback helps us grow and reach more professionals like you striving for financial freedom. Until next time, keep pushing the boundaries of your financial health. Thank you for joining us on this journey to wealth beyond the white coat.